This chapter is important and you should not skip it when studying for your examinations. I will explain everything in simple terms using real life examples. These fundamentals of company accounts that we learn at the foundation level will be applied, or we can say continued, at intermediate and final levels. Thus considering there is highly important topic. The crux of this chapter is issuing of shares and how to record journal entries for collecting capital from general public. First question arises, what is share? A share is a piece of paper given by a company for the purpose of collecting capital from the general public. For example, Rajamouli established R Limited as a public company. Rajamouli is a promoter. He made an advertisement for a film R that need 550 crores capital. Assume that each subscriber to our accounts portal channel contributes a capital of 1 crore rupees. The R Limited will acknowledge you after the company receives 1 crore capital from you. That acknowledgement document or paper is called share. In layman terms, a share is a proof of paper that is offered to collect a capital from the general public. A company collects capital from the general public by issuing acknowledgement paper, which is known as issue of shares. Taking shares has a number of advantages. The ownership of the company is transferable. If NTR wishes to transfer a portion of his share to Ram Charan, he can do so without any restrictions. A shareholder is someone who owns a share of a company. The company's owners are its shareholders, whether you own equity or preference shares. The capital of equity shareholders is called as equity share capital. The capital of preference shareholder is called as preference share capital. Sir, what we learn in the issue of shares? Dear students, we will learn general entries for collecting capital from shareholders. Dear students, when capital is collected, cash or bank account are debited and we must credit the capital account. When a proprietor contributes capital to a business, the general entry in the business is cash account data to capital account. When a partner contributes capital in a partnership business, the general entry in the partnership firm book is cash account data to partner capital account. When a shareholder contributes capital, a general entry is made in the company's books is cash account data to share capital account. Dear students, when money is put into a business, whether it is a sole proprietorship, a partnership or a company, the capital account should be credited. We are not going to learn anything new in this chapter because it is very simple one and I will explain each concept in detail. At the end of the day, your favorite chapter will be company accounts. Issue of shares for cash. Shares can be issued at par, at discount, at premium. Let us look at an example. The MRP of the pen is rupees 10 and we are selling it for rupees 10. Means we are selling it at par. The pen MRP is rupees 10 and we are selling it for less than that, which is known as discount. The pen MRP is rupees 10 and we are selling it more than that, which is known as premium. According to the Consumer Goods Act of 2006, consumers cannot be charged more than the MRP listed on the product packing. I gave this example for understanding. When the shares are issued at their face value or nominal value is called at par. When the shares are issued at less than their face value or nominal value is called a discount. According to the Companies Act of 2013, shares cannot be issued at discount. However, shares issued to employees or directors can be issued at discount. Shares issued to employees and directors are called sweat equity shares. Only sweat equity shares can be issued at discount. When the shares are issued at more than their face value or nominal value is called premium. Dear students, in all three cases, face value of the share is rupees 10. 10,000 shares of rupees 10 each issued at par. For collecting capital, general entry is bank account data to share capital account. Sir, how much money is collected, Nana? Number of shares issued into issue price. 10,000 shares into rupees 10 each. Total how much? 1 lakh. So bank account data 1 lakh to equity share capital 1 lakh. Dear students, case B, 10,000 shares of rupees 10 each issued at 10% discount. Now question arises, on what value we should apply discount percentage? Always discount percentage is applied on face value. So what is the face value, Nana? 10 rupees. Discount percentage 10%. 10 into 10%. How much? 1 rupee. For each share, the discount allowed is how much? 1 rupee. So for collecting capital, general entry is bank account data to share capital account. So number of shares issued into issue price 10,000 into 9 How much nana? 90,000. Discount account data. Number of shares issued 10,000. For each share, how much discount? 1 rupee. 10,000 rupees. To equity share capital. Number of shares issued into face value. How much? 10,000 into 10. 1 lakh. Case C. 10,000 shares of rupees 10 each issued at 15% premium. Dear students, what is the premium for each share? Face value 10 into premium 15% equal to 1 rupee 50 paise. For each share, premium is 1 rupee 50 paise. For collecting capital, general entry is bank account data, number of shares issued into issue price. Number of shares issued 10,000 into issue price 11 rupees 50 paise. 1,15,000. To equity share capital, number of shares issued into face value 10,000 into 10. 1 lakh. To securities premium, number of shares issued into premium for each share 10,000 into 1 rupee 50 paise. 15,000. We shall now do analysis on all three cases. Number of shares are same whether issued at par, discount or premium. Whether shares are issued at par or at discount or at premium, equity share capital always credited with face value. Always credited with face value, issue price, and bank account should have debited with issue price. When the shares are issued at par, issue price equal to face value. When the shares are issued at discount, issue price equal to face value minus discount. When the shares are issued at premium, issue price equal to face value plus premium. Equity share capital is credited with face value and bank account is debited with issue price. Three terms used in issue of shares: issued, subscribed, allotted. In general term, issued means given. Issued check to Verma means check given to Verma. However, in corporate accounts, issued signifies inviting the public. Issued means inviting the public. R Limited issued 1 lakh shares of rupees 10 each. Dear students, don't consider that R Limited has given shares to the general public. Issued means inviting the public. When R Limited decides to raise 10 lakhs capital from the general public, they will place advertisements in business news channels, newspapers, hoardings, etc. Whoever wants, they can subscribe. In our story, who will issue the shares? R Limited. R Limited issue the shares in what manner? Through advertisement. Shares are available for purchase by the general public. Now, shares are available for purchase by the general public. Issued means inviting the public. Who will issue? Company. Company is inviting the public. Issued means inviting the public. Who will issue? Company. Subscribed means applying for purchase of shares. Who will subscribe? General public or applicant means allotting shares to the public. Who will allot the shares? Company. You cannot dance and say I am a shareholder of R Limited when applying for shares. Only on allotment the applicant will become a shareholder. Only on allotment the applicant will become a shareholder. You are not a shareholder when you subscribe. You are applying for the purchase of shares. Before allotment you are just an applicant. Thank you for watching. Students, please consider subscribing and click the like button and share with your friends. Bye for the day.